reading a recent article on Brexit in the Financial Times, I did actually see an article on the Making Tax Digital scheme, if that's the right thing to call it. It said that my business would have to submit 5 tax returns a year. Why haven't I heard about this, and what actually is Making Tax Digital all about?
Well, Making Tax Digital was sort of announced in the UK by George Osborne in his 2015 budget. And what the UK government wishes to do, together with HMRC, is to make HMRC, and this is their words, not my words, into a world-leading digital tax authority, reducing the burden for individuals and businesses to keep on top of their tax affairs. Right. Now, that's quite a statement. And I've never known government reduce burden, certainly not HMRC and the Treasury. But what the government believes is that businesses make careless mistakes when they sort of submit their tax returns. They also believe individuals do, and there are 2 strands to Making Tax Digital, for businesses and for individuals. But they're bringing in the businesses first, so I'm not going to deal with Making Tax Digital for individuals here today. Okay. And they believe that businesses making mistakes cost the Treasury £8 billion in lost tax each year. And they believe that by streamlining the tax return system, by making it more real-time, more digital, then they'll be able to spot errors more quickly, deal with them with the taxpayer and the businesses, and make sure that businesses pay the right tax. I mean, that is quite an admirable aim. I mean, I don't think anybody has any problem with them trying to be more efficient, and that businesses should pay their correct taxes. The problem is that they very much place the burden on the taxpayer. And what they are requiring is a change in the way that we deal with the tax system. For the last 20 years in the UK, there has been a system of self-assessment, both for businesses and companies. So as a small business owner yourself, you know that if you're a sole trader or partnership, you have to complete a self-assessment tax return where you put on your business income for the previous year, and you have to do that by the 31st of January following the end of the tax year. You can do that tax return on revenue software. You can do that tax return by getting your accountant to do it on their software, or if you do it by the 31st of October, you can still actually submit a paper tax return. Right, yeah. Companies similarly have, instead of 10 months like individuals have, they have 9 months to do that, to complete their tax return after their year end, and they have to complete a corporation tax self-assessment return, and they put that into the revenue, and it's 10 months after the year end. Sorry, I've got that wrong. It's 9 months after the year they have to. That is all changing. The government wants, and also at the moment, there is a requirement that companies and individuals keep proper accounting records for their tax affairs. Now, that can mean proper, beautiful sort of files of paper tax invoices, sales invoices, purchase invoices, paper statements. You could even have a paper cash book. Most people keep the paper documents, and they also have some accounting software. And the requirement is that you have to keep adequate or proper affairs, basically so that you can draw up accounts that show true and fair view and use those as the basis for your tax return. That's all changing. And it's a staggered change. It's coming in from April 18 to April 9, 2020. And what it requires businesses to do is to keep their records digitally. Now, that's a little bit different from what the current legislation says. And then it says that we must submit from those digital records a quarterly return of information. At the moment, it's going to be basically the profit and loss account that gets submitted to HMRC. That will be done at each quarter end. It has to be done 1 month after the quarter end. And then there is a final sort of confirmation return where basically you confirm or you make amendments to the 4 quarters figures that you've put in, and that will be certainly for self-assessment it will be 10 months after the year end. For companies it would be 9 months after their year end. So that's I don't think that's reducing burden, to be honest. I think that's actually creating quite a lot of burden. It's putting yet another return to go to government. Right, yeah. Now the problem is is how a company's going to do that. What do they mean by keeping your accounts in a digital format? If I sound slightly unsure here, it's because the consultations are still going on. It is due to be started rolling out from exactly a year from now, and we still have not had the final position from HMRC. I suspect that there are the policy people who know exactly what they want, and their technical people saying, no, that's not possible. And at the same time, they're also seeking consultation from the accounting and taxation professional industry. And we're saying, well, that's a bit difficult. You haven't thought about the practicalities of that. The consultation period has ended. They are now considering it, and we expect shortly the final guidelines. But we do know where this is going in principle. Okay. Now, keeping your accounts digitally, most people might say, oh, does that mean I have to have every sales invoice, every purchase invoice scanned in? It can mean that, and a lot of software really sort of does provide for that now. A lot of accounting software such as Xero and QuickBooks and Sage. But HMRC have sort of stepped back and said you can keep your accounting records on a spreadsheet, as long as the spreadsheet totals then follow through to approved software, either their software or the software, the Making Tax Digital compliance software that the commercial software providers will make. So you can
more of a realistic view in terms of, some companies might find that transition a bit harder than others.
Well, we need to plan for it. Some companies that have, it's going to be the smaller businesses that are going to suffer. Most companies, I would say certainly any company with turnover over £250,000 probably has a decent bookkeeper or a full-time accounts department where they already have computerized accounting records, and it really will be a software fix from their software provider. What it will be different procedures. Instead of they will have to know that each quarter when they do the VAT return, they will probably have to do a Making Tax Digital return as well, probably of their profit and loss accounts. We're not sure whether there is going to be facility to make any amendments, because though taxable profit is based on accounting profits, there are adjustments in the tax computation, and whether you do those as you go along or whether you do them in that fifth amending return, we're not sure of the details yet. But it's going to be those small businesses, the ones that as an accountant we slightly dread, that come in January with their plastic bag saying, here's my invoices and receipts for the last year, can you do my tax return? That is going to have to change. Any business with income over £10,000 is going to have to become digital. Okay. There are different implementation dates. The first one is for accounting periods that start after the 5th of April 2018. So that is exactly a year away. And that is for sole traders and partnerships. Now, that is actually the small one-man bands, but luckily there's been a reprieve for them. It's only for sole traders and partnerships with income over the VAT threshold, which for that year will be £85,000. Any sole trader or partnership with income above £85,000 will have to do Making Tax Digital returns a year from now. Okay. If you are a small sole trader, so electrician, a plumber, with income between £10,000 and £85,000, you'll have to do it from the 5th of April 2019. That's not that long away. So these people, if they don't already have a bookkeeper using computerized software, are going to have to change. Now, I think it's very brave of the Revenue to go after these businesses before they go after limited companies that are already established with good accounting procedures. I think they're going there because they think that's where the errors are, and it's like let's get these people onto the digital system so we can start helping them pay the correct tax. I think that is the thinking behind it, but it's quite a high risk strategy for the Revenue because it's these people that are least able, but that's why they're giving them the extra year.
Yeah. I suppose it's an inevitability to some degree as well, isn't it, in terms of moving to a more online-based form of accounting. Perhaps it's long overdue.
Well, I think it's all about being efficient, about making sure they maximise the tax take. I have read a figure this afternoon when I was preparing for this talk with you. I just thought, well, HMRC are actually pretty efficient as a world tax based in the tax authorities around the world, they are one of the more efficient ones, together with the US IRS and the German tax authorities. And it is a Wikipedia quote, so I'm not sure how accurate it is. But from 2014-15 figures, they collected £515 billion in tax. That's a lot of money.
Yeah.
And it was estimated that was 93.5% of the possible total tax take. Okay. So the tax gap was only 36 billion. Right. That is a big figure, but they collected out of a possible 551 billion, they collected 515 billion, 93%. Yeah. So I think they want to improve on that. They think there's 36 billion there. I mean, what are they borrowing each year? I think the public sector bonds, 60, 70, 80 billion a year. If they can close that, it really does affect the public sector borrowing requirement.
Yeah, viewed in that way, it does seem to make a lot of sense as a clear motivator, definitely.